Today, we're excited to be here on another episode of the Midnight Founders podcast with Danato Callahan, hailing us from the Midwest, Missouri. Is that right?
That's correct.
Okay,
Yes.
perfect. I remembered. Flew in just for this show.
Oh yeah, absolutely.
And maybe another conference in Salt Lake too.
Oh, maybe.
Donato, he comes to us as CEO of Bright Investor. Also, he's a real estate analyst with Cree Capital and has done some really cool things with that organization. And recently, his experience with the West is he recently graduated from, I guess in 2022 from Boise State University.
Yeah, and this not too many years ago. It's been a crazy couple years since leaving college and getting out to the real world.
Very cool. Well, Donato, we're excited to see your story and hear your story, I should say, and kind of see how you've built your business and what you're working on.
Yeah,
So,
absolutely.
welcome. Good to have you here.
Thank you very much. It's cool to be here.
Give us a 30-second pitch, Donato, or at least elevator spiel on Bright Investor, what you're doing there and why that's making a difference.
Yeah, so Bright Investor is a real estate data analytics platform that is designed to help property managers, investors source opportunities for their business, get their contact information of owners so you can reach out to, analyze deals for valuations and rents, and then be able to create end user friendly reports that are interactive and fully white labelable to help grow the business, close more business, and retain business.
Got it. And so who's your market for that? And I got to put a disclaimer here. Key Renter, we're one of your clients, happy client. We've been using your software a lot in the last, I think, 2 months since we've gotten involved. And that's part of why this show came into be is because I was talking on Zoom calls with you and thought, you know what? Donato is building some really cool things. So wanted to make sure we captured that on the podcast.
Yeah, thank you. And actually, after the show, I've got some upcoming new releases I want to show you, kind of exclusive. So remind me that after the show, I'll show you some of the cool stuff you're going to get access to.
Very cool.
But with Bright Investor, we started off really focused on beginner out-of-state real estate investors because that's what I was when I was starting. And that's where the product really came from. It was actually, I was in college and I'd minored in GIS, which is basically mapping science. And one of my senior projects was make a map of something you're interested in. And I was interested in real estate and I knew I wanted to buy it, but I was in Boise and I knew I was moving to St. Louis after graduation. So I thought, what if I can make a map about real estate that would help me make an investment decision when I'm, hundreds of miles away? And I built the prototype
for commercial or real estate or for
residential real estate for 1 to 4
Okay.
units. Kind of like talking about like market dynamics of like crime and school rankings, rent growth, all the market information you would need. And so I ended up meeting my co-founder randomly on Facebook, and it's a crazy story, but he had interned with Brandon Turner from Bigger Pockets for several months to a year out in Hawaii. And he'd just come back and he's looking to connect with other people. And I was one of 50 comments on his Facebook post, like, oh, sure, let's just connect. Maybe there's something we can collaborate on. And we just started doing weekly Zoom calls until eventually I said, hey, I got this thing I've been working on. Let me show you a prototype I built. Shared my screen and he said, Donato, you're not going to believe this. I'm working on the exact same thing. And he showed me his prototype. And we're like, dude, we should start a company together. And that's what we did. That's literally how it started. And so we immediately launched it. We got a project manager. We hired devs, raised some seed capital from friends and family. And just...
How much did you raise?
Like 40 grand.
Okay.
And we just went for it. And, our approach was, if you have money, you'll spend it. So we knew that, okay, great. I thought it was going to be a service-based business. He was very much the tech guy. I was like, we should build the software out of this. So I did a lot of the feature development, a lot of the iteration of what the product needs to do and function like. And then we would raise some money from friends or whatever. And we would go do a certain iteration of the product. Like that'd be enough for 3 months. And we intentionally kept ourselves hungry because after 3 months, especially when you're 21 at that point, I was 22 at that point, I had no track record. Why should anyone trust me with money? So my philosophy was, okay, let me take a little bit of money, just enough to get me to the next level. Let me show you progress and let me show you that we're doing a good job. And then I'll take the next little chunk and the next little chunk and the next little chunk. And so we had never had a situation where we had a bunch of money, we go blow it on a huge ad budget or we hire a bloated agency or something like that. And that's how we got to the point where, we did that for the first 2 years, launched the product.
While in still school, right? You're still going to school.
So here's the crazy part. Okay. So I graduated in May of 21 and I moved to St. Louis. So I moved to St. Louis around August of 21. At the same time, I launched Bright Investor. At the same time, I joined a commercial real estate investment group and started buying commercial multifamily.
That was Cree Capital?
That was another group before Cree Capital.
Oh, okay. So in addition to Cree Capital.
Yeah. So I was doing the Bright Investor. I was buying commercial real estate with the group, which ended up leading to my first 172 unit building. I had just purchased my first 4-unit building and was learning how to be a landlord for the first time in St. Louis. And then my day job was I was a geospatial analyst with the Department of Defense with the CIA, FBI, and NGA. So I was doing
Wow.
those 4 things
Wow.
out of college. And so I'd go to work at the DoD, and then I'd come home and I'd work on commercial multifamily and Bright Investor. And I did that until September of 23. And around September 2023 is when I got the opportunity to work with CRE, and I left the DoD. So I was just doing multifamily with CRE and then Bright Investor. And then I've been doing that last 2 years. And then I got into education and mentorship and coaching. I've coached over 200 people in commercial multifamily. I still do it with one-on-one and group clients. And that's kind of how the whole trajectory's gone. So it's been 4.5 years since college, and it's just been an absolute whirlwind.
So you don't like to sleep very much.
No, not at all.
Okay.
It's been, I definitely like, I knew early on that, I was very much a big fan growing up of talking to people and saying, what is it that you do? What do you earn? Are you happy? I remember always talking. It was super inappropriate for like an 8-year-old to go to a bunch of their parents' friends and ask that. But from a really young age, I understood there is some kind of correlation between what people do with their lives, the amount of money they earn, and their overall satisfaction with life. And so as I had more conversations and as I got older, people were more willing to share that information with me. I got to start mapping out like, okay, where is the commonality here? Like, what's my real range of that I should be shooting for if I want to have a lifestyle that a life that I'm happy with. And something that really kind of came to fruition as I started talking to more people was that success leaves clues, but failure leaves landmines. So many people, especially being a younger person who's in the late teens, early 20s, if I could go to any adult in my life or any stranger and I could say, if you were my age, what would you do? I could not get people to stop talking. It was just like they'd lay out every single mistake they'd made and said, I wish I would have done this, 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 and this. It was so easy because when I got that information, all I had to do was say, okay, great. Here's 10 people's opinions. I'm going to layer them on top of each other like a map, and I'm going to see what path they all recommend that I follow. Everything that I've done has just been hundreds of people saying, oh, here's what I wish I would have done when I had, less familial obligations, less work obligations, maybe the golden handcuffs weren't on. If I could go back knowing what I know now, I would take this path. I was like, okay, I'll just do that. And that's literally it. And then also recognizing as a young person, I'm never going to have more energy or more willingness to work now than any other time in my life. And I know that every year that goes on, I'm going to have less willingness to do that midnight oil every time. Like, and even now, I look back to 3 years ago, I'm like, I don't even know how I did that. Like, I would have died. That's insane. But when you're starting out and you have this opportunities, like just pour everything into it. Just go as hard as you can, as hard as you can. Do the, multiple positions at the same time, stack your experience. And so I might have 4 years in the workforce, but the amount of things I've been able to do is more akin to a 15-year or 20-year, 10-year employee in terms of things they've been able to experience and go after. So this whole last couple of years has just been a massive like acquire skills, acquire network, acquire opportunity. And now I think the next chapter is about scaling it appropriately, putting the right people in the right places, building larger systems around it, and seeing what I can accomplish by the ripe old age of 30.
Nice.
That was for you guys.
I love it.
So,
I love it.
how's the market in St. Louis for commercial real estate right
I
now?
love it. I just bought another building in December.
Did you?
Oh yeah. So I had my first fourplex there that I house hacked. So I lived in one unit, rented out the others. Awesome.
Nice.
Best decision of my life. Bought it the day I turned 22. Like that morning I rolled out of bed, had a chocolate chip muffin and went to the bank. It was awesome. That building allowed me to save money on rent. When I got there were 2-bedroom, 1-bath apartments, rented for like $500 a month. And I have them rented out for $1,200 to $1,300 now. And so doing that approach, being able to renovate units, replace the doors, add in HVACs, renovate the kitchens, do all this upgrades over the last couple of years, taught me how to be a landlord, taught me how to work with tenants, taught me, again, how to kind of financially steward these investments. And then as I bought more commercial stuff, so 200-unit buildings, senior living facilities as well, just recently, I was like, I really want to keep buying small multifamily in St. Louis. And so I found this property is a 6-unit building, fully upgraded, 2-bed, 2 baths, new wiring, new plumbing, new electric, new kitchens, new baths. It's gorgeous, fully occupied. And I'm like, boom, I want that. And so we picked it up in December and I'm working on another couple. I have like 4 or 5 I'm tracking right now, but I keep planning to buy 1 or 2 a year for the next 4 or 5 years and just keep rolling it up. But I love it because of the relative affordability from an investment standpoint, but you still get really good rents in relation to the price per door you have to pay. And I'm a big believer in Midwestern affordability, in that over time, coastal markets will continue to see price increases. And then in St. Louis is going to be one of those major Midwestern cities that's, hey, it's kind of nice. I can get 2 hours to Denver or 2 hours to Florida, really easy to get around. The affordability's there, the city's there, the food's there, the economy's there. I think it'll continue to be a place that people move to kind of get their slice of home ownership and having a bit more autonomy in terms of where their money's going. So I'm a big fan of St. Louis.
How are you financing? How did you crack that code to get the financing you needed, being so young, as you've mentioned? And sounds like you've got some great resources coming in. But how did you do that?
Yeah, so the first property, the fourplex, that was a FHA loan. So that was
Okay.
a 3.5% down, first home occupant. And very intentionally, I remember I was talking to my parents, like I had saved the money to buy this myself. And so I remember having a conversation with them around like, oh, are we gonna you guys gonna help me at all with this? And like not that they had to or expect them to, but like, oh, were you guys intending to? And I remember they like very clearly said no. And I was like, oh, like that's totally fine. You don't have to. Like I can do it myself. I'm interested in your logic. And what they told me really stood out, and I'm very appreciative of what they ended up doing. But my mom sat me down. She was like, "You have the capacity to do this yourself. You save the money. You've done it yourself. If we help you with this for the rest of your life, people will never give you the benefit of having done this on your own accord. There will always be this kind of swinging axe over your head that your parents helped you get started. So even though we can, I don't want anyone to be able to take that away from you in the future." Like, okay.
That's awesome.
And so I did it myself, bought it my own money, um, put the money down. And then how did my parents help me? They'd come down on a weekend and they'd help me do some renovations. Like they'd help me paint or they'd do something like that. And that's
Do a
how
lot
they
of sweat equity kind of
yeah,
stuff.
and they would just help me as I'm okay, Gary. I'd pay for them to pay for their hotel, pay for their, their food coming down, like make sure they're all taken care of. And then they just help me, take care of some things inside the units. So that was how I got started on the first one. The most recent one, the sixplex, this was like a culmination of all the things I've learned, right? So open up a new LLC specifically for the property, have a registered agent for the LLC. So it's not my name, not my address, right? I get a private investor who I say, look, you're getting 3% in CDs or whatever. I'll pay you 8% fixed every single month for this asset. I'll manage it for free. You get paid before me. I'll take care of all the work. And then I'll put 30 grand in a reserve account just to make sure the property's in good shape. And, you're never in a situation you're not getting paid. They're like, okay, that sounds great. Raise 80% of the equity from him. I contribute 20%, buy the asset. I manage it. So far, everyone's paid. The guy gets paid every single month fixed and I manage it. And then I'm working on the next one. I got 2 or 3 more private investors lined up to go. And then in a couple of years, I'll refinance him out, pay him out his principal, pay him out his other return,
Take over full control.
keep the property myself,
Gotcha.
and hopefully, do that another 5 or 6 times in the next couple of years and be good
Good
Are
for
you
you.
layering that with debt, or did he finance 80% of the purchase
with
price?
debt. So we're doing
Okay, so 80% of the down payment.
Yeah, so that's 70 to 75% loan to value using a DSCR loan, a debt service coverage ratio loan. So that comes in first. So like this previous property that I just got, right? 75% loan to value, call like 150 to $180,000 needed in equity. You split that 80-20, and then I take over the rest of the asset and I do all the work and I make sure of things and I organize it in a way where look, the money in the bank account has to be this high and you get paid first. And if the money is ever below that account, I don't get to take any distributions. So I only get everything that's a little bit extra because my goal isn't the cash flow, right? My goal is the asset in 6 years or
The
7
equity
years.
play.
Exactly.
Yeah.
And I have the contractors, I have the handyman, I have it. And this asset, if you guys are familiar with like commercial multifamily returns, like cash on cash, things of that nature, this deal is like a 22% cash on cash deal level, 70% cash on my money. And so you can do something like that and you have the depreciation on it. And I can look at the market and say, and reasonably in 7 years, 7 to 10 years, I'll be able to refinance this. Okay, great. He's paid out. This thing already spits off thousands of dollars a month in net income, right? Completely net of everything. And as this continues to grow and the rents continue to grow, it'll just be better and better.
In that scenario, Donato, what are the risks that you're taking, and like how have you mitigated those risks?
Yeah. So one of the risks is looking at the individual leases. In this situation, 4 of the 6 leases are on 2-year terms. And so when I underwrite the numbers, I look at, okay, I get my insurance quote, I get my debt quote. I know I'm managing it myself. I have my own team of contractors and handymen, so I know what their rates are. I can get soft quotes from the utility department, what I should expect for billing. And then I also buffer in about 15% on repairs, vacancy, and CapEx of the gross rents that I put away every month. And so using Bright Investor software, I analyze my deals and I say, okay, great. What are the returns for this deal overall? Can I afford to pay a private investor to still have money left over for me? And when I do all those things and then I get my inspection, make sure that, I'm fine to do interior stuff. If I can walk in a room and see it, I'll fix it. But I don't want to have to deal with anything that's, hidden from me.
Behind the wall.
Yeah. So I get my inspection done. Patrick comes back and says it's one of the best maintained buildings I've seen. The guy just spent like 300 grand updating in the last 4 years. It's beautiful. When I can do all those things, I have in-place tenants, and I know that the in-place cash flow is enough for me to hit my returns. Meaning I don't have to raise my rents at all in order to make this investment valid. But I also know there's about $600 a month in gap between current rents and where the market's at that I can raise. Not even going out to market, but in terms of the tenants at the property, I have one paying $1,350, I have one paying $1,050 in the same building for the same type of unit. So I know I have margin there I can increase. And the fact that it's not reflected in my underwriting, that's just additional upside over time.
It's gravy on top.
It's just gravy on top. And so the best part about this whole thing is that this deal works at a 7.25% interest rate. My fourplex has a 2.375% interest rate. If I got this sixplex at a 2.375, I'm going gangbusters. And so I feel really, really confident that I can put all these things in front of someone and say, the interest rate environment is the worst that's going to be, over the last 15 years. It's the worst it is right now. This is likely going to get better over the next 5 years, 10 years as well.
And we're hovering around like 6 right now.
Yeah. So like when I'm able to refinance this is only getting better from a debt perspective. And I have fixed rate debt, 30-year fixed rate debt. I don't have to do anything. The deal works right now. But if I can refinance to 5.5%, 5%, it just makes this deal better and better. But what that means is like this deal is a home run in my opinion. But the caveat is that we can't hit home runs every time. There's not an opportunity like this available every single month that's just coming on the market that you can go find.
Right.
They're few and far between. So when you do find them, it could be a year, it could be 2 years if you're not like doing your own deal sourcing off market. So when you do find them, you have to say, yes, go put the offer in immediately.
You have to have it all online in place.
Which is what happened here. Like I found it and I said, yes, tour, offer, go. Because at this point, I've experienced enough to recognize a good opportunity when it presents itself. So I was able to take action faster than other people may have in terms of maybe going back and forth. And that's really the competitive advantage that I have in terms of also being close to St. Louis. I can get there and be on the ground and take a look at those things and make it work.
Good for you.
Did you have the investor kind of in your pocket ready to go on the deal so that part of that piece of the puzzle was ready to go?
Actually, no, kind of. So
Interesting.
I had a property manager buddy of mine in St. Louis, and he was like, hey, I got this client. He's looking to buy like a 15 unit building, and he wants to know my opinion on it. I don't think it looks good, but I know that you're in commercial real estate. Can you just give me your 2 cents on it? I was like, yeah, absolutely. So I take a look at the numbers and I tell him, hey, you should not buy this thing. It does not make sense financially. And I give him the whole reasons. And I say, you know what? You've got a client that wants to buy multifamily in St. Louis. Are they local? He's like, oh no, they're in Colorado. I'm like, okay, well, what if they just gave me the money and I buy the property and I'd pay them a return on it, but they don't have to deal with the closing or the management or the work, and that way they can buy it, but they have a person that's kind of stirring the investment. They're like, well, that's a great idea. I'll connect
Smart.
you. And so he set up a phone call and we're talking about it. And he was like, yeah, I'd love to talk to you about this. And so I was like, yeah, I got a couple $100,000 to put away. I'm like, interesting. And so we start having conversations and I start setting up deals. And then I have this deal come up, and then I'm ready to say, hey, let's talk about it. And then a different investor came in on this one, and I got to go back to that guy and say, hey, actually, someone just came in on this one, but how about the next one? He's like, oh, that's fantastic. Here's how much money I have.
So you're lining up investors.
I'm
behind
lining
each
them
other.
up. And,
That's great.
and so when I finally got this first deal, like I submitted an offer before I had a commitment, but I just went to people in my network and I was like, this is a good deal. I can tell you why, but this is why it's good. You should do this. And they're like, I don't know. I'm like, no. Trust me. What are you making right now on your CDs? 3%? I'll pay you 8. Trust me. You're going to do fine. And they're like, okay, fine. We'll go for it. I'm like, great. And now they're happy. They're like, oh, this is great. I'm getting paid. I'm like, that's what you do.
And then they bring people with them
Yeah.
because they start talking about it.
They talk about it. And the fact
for
that
you.
also like I had another sixplex I was going to make an offer on, and I went and I toured it.
But those are considered commercial properties
They
at that
are.
point.
Everything
so you can't do
over
FHA loans and things like
No,
that.
those are all DSCR or like
Mhm.
portfolio loans.
Mhm.
So their LTVs are 70, 75%, but the benefit is that it doesn't go to my DTI or my debt to income.
Yeah.
the other cool thing about the situation is that I had another sixplex I was going to work on with that original investor. I said, hey, I think it might make sense. The numbers look pretty good. Let's go talk about it. I show up. Units are about 25-30% worse condition than I thought they were going to be. The rents that they had told me they were getting were actually their pro forma, not they're in place. Walked around and said, not quite what I'm thinking. And so when I called the investor and I said, hey, my goal is to make a successful relationship. I don't think this is the deal for us. Here's why I don't think it's the right one. We should probably wait for the next one. That conversation flipped the script to where the first question he asked me was, well, can we make it work? How can we make it work? Is there something we can do to get this capital in? And from my perspective, the simple act of telling someone, hey, I know you're willing to give me money and I'm telling you I'm not taking it because I don't think this is good enough for you, is a psychological shift in
They
perspective to
want
say
it even
they want
more.
it
Yeah.
because I'm not sitting here taking things from you just haphazardly. I'm trying to deploy it intelligently. And so now I can say, hey, when something looks good and I've confirmed it, I can say, this is actually going to be good. And I'm building up that trust to say, this is only going to go for the right opportunities.
Mm, good for you. Well, for the audience, you're getting your crash course in real estate
Yes,
investing
you are.
101. This is awesome. And once you have your companies built, then, obviously you can use some of this advice and this knowledge to go and buy your portfolio of real estate. 'Cause that's typically what people do is they
Yeah.
build their companies and they go use that money to build their real estate portfolio.
Yeah. So
And
typically,
you did it all together
yeah.
at the same
So
time.
most people, they want to save. I tell people all the time, I sacrificed my hairline and my waistline for the last 4 years. I tell people, like, most people do this linearly. You don't have to do everything simultaneously all the time. If you want to, I mean, that's what I did, and I'll advocate for, like, hey, it worked. That's awesome. But normally it's a little bit more, you make your money, you get a little stabilized, you start buying real estate. But I think one of the things that helped me in my journey was that I was building software products for real estate. Then I was buying real estate and I was teaching people how to buy real estate.
It
And then
almost kind of like they were adjacent to each other.
exactly. And like I also now work with a capital raising organization who places equity in commercial real estate ventures. So I'm raising money for real estate. So when people talk about all the things you're doing, I'm like, yeah, but it's all in the same circle. Like the Venn diagram is very closely overlaid because I'm able to, well, I have to do like a mental shift between kind of roles and things. Everything is in this realm of real estate. So every time I develop a skill here, it's actually helping me get better over
It's
here.
transferable in other
Yeah.
places.
I don't think I could have done what I did if I was trying to separate by industry. If I was trying to do like e-commerce over here and real estate over here, or maybe like drop shipping over here, or, Uber driving over here, that wouldn't have scaled. But the fact that everything was in the same, circle, it also increased my track record and my experience, and it helped me kind of be able to get into more rooms to be able to say, no, I'm doing all these things in here, which helped a lot.
Good for you. I love that you're sounds like you're bullish on the St. Louis market, right?
Absolutely.
I mean, one of the benefits that they have there is, like you said, lower property values, but the rents are still pretty. I mean, they're average, right?
Yeah,
If not
absolutely.
increasing, right? And here in the Utah market, what we've learned is our property values are astronomically high. I mean, we're
Hmm.
trailing California and Hawaii, right? So it's really hard to make things cash flow. So when you do purchase here, it's more of a long-term equity play. Rarely is it cash flow.
Hmm.
So are you bullish on helping others and advising other investors to go to the St. Louis market, or, or find markets that work for them? Because not all markets
Yeah.
work like that.
Yeah, I think it really depends on where you're at in your journey. So I know when I went to school in Boise, something that I saw people do where they had parents who would buy like a 3 or 4 bed townhome around like maybe a couple blocks off the college campus, and they'd buy it. They'd have their student or their kid live there, get some friends to help rent from them, own it as like a break even asset, just maybe cash a bit slightly negative, whatever they had to do, and
Hmm.
then after 4 or 5 years, they'd sell it to the next family that wanted to come in. And so there are strategies that are around, the cash flowing versus appreciation. I think for a brand new 20-year-old, 21-year-old investor, what I would tell them to do is move to, I call it the Mississippi corridor. Look at the Mississippi, go like 200 miles east and west of that. Find a city in that range that you can buy a fourplex where you'll just break even if you live in one of the units and the other three rent it out. Go do that. Set yourself up. And then as you grow in your portfolio, as you grow in your experience and you grow in your ability to place equity, buying real estate in places where, like, for example, I know flippers like Utah a lot because you can go buy a property for 800 grand, turn around and sell it in 4 months for 1.6. That's really attractive. You can't do that in every market like St. Louis. So if you're someone who wants to go into a path of real estate where forcing value through like flipping or through commercial real estate NOI growth is valuable to you, markets like Utah, you're going to see a lot bigger bang for your buck. But if you're someone who wants to be more passive in your real estate and you're looking for the higher cash flows that go to Midwestern markets, and if you're someone who is willing or able to put down large amounts of down payments, so you know that maybe this market's appreciating 6% per year, you want the write-off every year, maybe it's going to be a vacation home for you, you're going to put 40% down, you're going to be in Utah, you're going to hold it for 15 years, great. I would say um, every strategy can work in the right market, but not every strategy is great in every
In
market.
every market, yeah.
So you have
Well
your,
said.
yeah. And so as long as you can match your expectations with what the market demands are, great. Like if I say, hey, if I tell myself I want to do long-term rentals that cash flow with multifamily, if that's what I'm saying I want, right? Okay, great. Now I have to go find where that works. If I'm saying I want Salt Lake City, I want Utah, okay, now I have to go find what works in Utah. But I can't have both. As long as you're cool making the sacrifice and adjusting to the other option, I think you can be really great in your real estate adventures.
And the way to do this and figure this out to transition
Mm-hmm.
is to use the Bright Investor platform, right? The software that you created.
Absolutely.
So tell us about that journey and how you've built that company, sounds like from scratch with your co-founder.
Yep.
And what are you working on now that you're excited about that's going to help this company scale?
Yeah, so I would say that when we first started, it was all about market research. So like, okay, learning more about markets. And that was cool, but it wasn't enough because people would use it, they'd find out more about the market and it's okay, great, but now I need to find properties. We're like, that's a good point. We should probably have that. So we added in property data. They're like, okay, well, I have property data, but I need to know more about these assets. I'm like, that's a good point. So we added in sales comps and rent comps and a deal analyzer and ability to analyze stuff. I'm like, okay, that's pretty cool. And then we realized that, okay, there are people out there like property managers that need to be able to close new business, source leads, and do these kind of conversations. I wonder if property managers would find value in what we're doing. The answer was yes, which is great. That's how we got
I can
connected.
vouch for that. Yes.
Yeah, which is awesome. And so we've been working with property managers, signing deals, working on expanding our access, and then through conversations with a lot of key renter folks, improving the product. They're like, oh, what if you added this component to the rent comps where I can see days on market? I'm like, that's a great idea. So we add that in. And right now we're just a few weeks away from launching Bright Investor 4.0, which we're really pumped about. But some of the upgrades are finally we have a whole new user interface going live with all updated mechanics and how things look. We're also finally releasing our new mobile friendly version. So people can take Bright Investor on the go and use it to analyze deals and opportunities wherever they're at.
That'll be huge.
Yeah. We're also updating all new deal analyzers. So we have long-term rental, short-term rental, mid-term rental, co-living, BRRRR, fix and flip, wholesale, DSCR, and we have massively overhauled capacities, including different types of loan structures, different types of interest rates, different types of scenarios you can run, and being able to save your own defaults to make your analysis superpowered. And then I'm really pumped about this. This is kind of in the secret works, getting you exclusive here on this.
You heard it first on the Midnight Founders podcast.
You heard it first. We're finally going live with our direct MLS integrations, which means that we have multiple hourly updates from every MLS in the country that includes agent remarks, that includes even more updated MLS information and MLS photos, which is giving way to our new AI photo analyzer, which will take MLS photos and then analyze them to tell you what the property needs in terms of repairs, line item expenses, and even what the interior of the property would increase or decrease the rents on the market in terms of what's going on.
Dang.
Coupling, yeah. So we're doing that in company with our new Brightbot. And the Brightbot is an AI companion inside of Bright Investor, where you're looking at a property, you're looking at it, and this little bot will say, hey, how can I help you? And it will be able to run the different property through multiple exit strategies to tell you which one's the most likely.
That's what I love the
Yeah.
most, I think, about Bright Investor.
It's awesome. So that one will do automatically. It will also be able to look at the property data and tell you the risks. Like, oh, this is a 1923 asset. We don't see electric permit on file. And you haven't accounted for electric remodeling or electric updating in your budget. You might want to add this much in. It'll do
And or lead and or asbestos. all those
exactly.
things.
So it'll do risk assessment. It'll do deal assessment. It'll do final go, no goes. It'll do photo analysis. And so all of that within BI to allow you to get the most accurate information, the most ways to analyze an opportunity, and a third-party AI assistant, Brightbot, helping you analyze for risk. So whether you're a newbie on the team who doesn't know much about real estate, this can kind of provide your guardrails for that. Or if you are an experienced person that wants to just quick double check, like making sure I'm not missing anything, that's all incorporated into BI. So we're really, really excited about that. And it's the next level of making Bright Investor just this insane, massive amounts of data, massive amounts of ability to take action on that data in the user-friendly format that we've delivered.
Is this mainly for the property management companies, or are you targeting investors as well?
So the product is definitely geared towards investors and property managers. So the investors are going to use it for their
Deal sourcing.
deal sourcing, running their own numbers, things of that nature. But we found there's a lot of investors that would rather call someone like you and say, hey, I want to buy a property. And the property manager is using our product to go find landlords that own assets already and call them about management services. Or when realtors come in or when existing landlords come in saying, hey, I'm thinking about buying this asset or I have this property. What do you think about it? We can empower the PMs to go out there and say, well, here's what's happening in your market. Here's what I'm seeing about the deal. Here's a report I just ran for you. Here's a rent analysis I just ran for you. And all that landlord or that investor is left with is, wow, they can do all of this for me. I'm just going to keep working with them. And so what we'll find
And
is
it's branded to that company, which
and
is so nice. It looks like
exactly,
it's coming from in-house, the in-house team.
exactly. So it's your solution. It's your
All white
value,
label.
all white labeled. So what we found is that a good portion of investors will outsource that work to the PM. And simply, I mean, because we're making it so fast and easy, the investors just come back and over again saying, oh, what about this? What about this? And you just say, oh, sure, 2 seconds, send the report over, to do the little analysis. And it allows PMs to kind of control the referral markets as agents come in, investors come in, and they have their own sourcing. So that's the two real demographics that we focused on, is making the product. And we've done that because property managers serve investors or accidental landlords, right? Generally those two things. So we need the product to be at a point where if an individual investor were to leverage it, they get a lot of value. Because if that's the case, then when a property manager uses the product, they'll be able to offer a lot of value to that investor indirectly through us.
Wow.
It's very cool. What I think I was so impressed with from the very moment I met you, Donato, is the fact that you are you have a level of humility that is really important for entrepreneurship. So, for example, you just said recently, "Hey, we heard from our audience, to put in this feature, or why don't you have this feature?" And then you said, "That's a great idea. Let's do it." And I think that's so important as a founder and entrepreneur to listen to your audience and to poll them and see what they need and want, and then incorporate it if you can, if it
Not to
makes
think
sense.
that you have all the information.
That's right.
Oh yeah.
To build this the way you want to go. That's a really good point.
Yeah, and you've done that really well.
Thank
So,
you.
so kudos and congratulations on that.
I appreciate that. There's actually when we were in the first year or two, I used to have what we called Bright Investor roast sessions. So
Okay.
I would email our user base of people who'd canceled the product in the first year or so, and it was garbage. Looking back now, the product was horrible the first year. Oh my gosh, I'm so embarrassed. And I'd say, hey, you didn't like our product. Would you come roast me and tell me why? And not many people wanted to take me up on that, but had like maybe a dozen that would show up, and I'd be like, yeah, so
Like
just
online, you're doing
yeah,
this
like on a
online?
Zoom call, like
Oh, on a
on a
Zoom
Zoom
call.
call, and I'm
Okay.
like, just tell me why we suck. And they'd be like,
That's a good
well,
idea. I've
yeah,
never thought about that.
yeah. And I'm like, well, this, okay, that's fine. Like, you're not going to hurt my feelings. Like, you'd hurt my feelings by not telling me how to get better. That's the main thing. And so we'd also watch how people use the product. And we'd say, okay, great. What are the biggest complaints right now? Okay, great. Let's go fix that. Or when our super users are using the product and they're saying, okay, I want to do these things. I was like, okay. And then I'd have an idea for a new feature and we develop it and it would crash horribly. No one used it. I'm like, oh, all right. Well, I was wrong about that. And the more that we leaned into our users giving us stuff, with a very important caveat I'll make to all the listeners out there, just because a user asked for something does not mean that we built it. There's a lot of things that we've been asked to build that when I ask them, our users, can you give me a little bit of reason of why you want this? There's not much substance behind it. It's kind of like like a flash in the pan idea.
It's a nice to have.
It's a nice to have. So I would tell you that one of the most difficult things we've had to do is balance the feedback that we're getting that critically makes the product better, that will improve retention, improve usability, and the features that are cool, they're mentioning, but they ultimately aren't going to keep them around or make them want to sign up to use our system. So that whole process has been a long game of figuring that out and learning to differentiate between the two. And also having a really long running list of things that we might get to someday that are not priorities right now, but could be cool in the future. And I think one of the most important things is early on, I did not have a really good idea of what technical development needed. I was like, oh, you guys, we can just build this like in like a month, right? No. And so our project manager, my co-founder, who I could not have done this without, were very much like
Shout out to him. What's his name again?
Drew McCluskey
Drew McCluskey. Shout out.
David Lopez. They made this happen. And so I remember many times they'd be like, okay, well, I understand why you think that can happen that way. And they'd be very patient with me. They had to train me on how to react and how to do things. And over time, I've recognized the value in having good, consistent technical expertise and making these things work, making these things scale. And they're the ones that have, where as much as I provide the momentum,
And the vision.
yeah, I provide the momentum, I provide the vision, I have my foot in the gas, I'm like, go, 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 let's make it happen. They're the ones that make sure the car is not going to fall apart while I'm trying to go to 100 miles an hour. And it's been a really awesome partnership for the last couple of years. In the same time that we've been building a company, I've watched Drew get married. I watched him have his first two daughters. I'm Uncle Don to his two daughters. I bought a
That's
house
awesome.
in his hometown in central Missouri. I moved there last year to like we could all be together. And my house now, the people come over in the morning, we code, we work all day together, and then he goes back to his house at night. So we have my own little incubator, and his daughters come over, and I'm Uncle Don, and they raid my M&M stash for them, and they have their toy box, and we're all there. Um,
Wait and tell the audience the most important part. You've got this massive board game collection
Oh,
on
yeah.
your shelves, right above your desk. So anytime you're on a Zoom call, I see stacks and stacks of board games, which I'm assuming is your passion as well.
Oh yeah. And so like, you walk in the front door of my house, you got the couch, you got people on the couch just like sitting there doing their work. And then I'm over here in the game room with my big, like, oak table and my racks of board games. I've got all the good stuff. So like over Christmas, I got Elder Scrolls Betrayal: The Second Era, which is a Skyrim based campaign game. I
Awesome.
dropped 50 hours in that game in like 4 days. It's awesome. 12-hour days every day. Just
Like a marathon with your family, right?
yes, so good. So when I can, I'm playing board games. I'm going crazy. I will routinely do 12-hour days of just okay. We're gonna have my buddies from college come down. Like okay, we're doing Friday, Saturday, Sunday, 12 hours a day. Boom, go. Get the crock pot going, charcuterie going, wine going, and we're just going crazy. So
I love it.
I love it. And in a weird like roundabout way of like, what's the meaning of this? I do look at life like a board game, like legitimately. Because most of these, indie Euro board games or other types of, board games, they kind of revolve around this idea of you're going to do an action. It's going to give you a resource. You can use those resources to get a better, stronger action. And then you're going to get more resources. And then I love engine building games, which is when I do this and that will pay me off later and later. And so I, from a young age, was really attracted to engine building games. Like, well, I can get something started and it just keeps going and going. That's how I look at my life. And right now I'm playing the board game and I'm in my early 20s and I'm accumulating these resources and I'm going to use this to buy this card or this ability, which then is going to give me more. I can do this. I'm just playing a board game.
Playing a
right now.
board game.
That's all I'm doing is in real life. And so for all those parents out there with young kids, I want to be like, how do I get my kid to go do this? Just go make them play board games.
Turn off the screens.
Yes.
Turn on the board games.
Force them to play Res Arcana, okay? Res Arcana, and have them go play Teotihuacan, and you're going to do great. They'll be billionaires, I promise.
I love it.
Yeah.
I love it.
Well, you said that you asked this question of a lot of people early on in your career. So you've got 20 years of experience in the last 4 years. What do you wish you would have known at the beginning that you know now? Or what advice would you give to somebody that's just getting started?
Yeah. So I would say, and I'll take a little bit more of a somber approach here. What I've done now in the last couple of years, if I went to the same people for capital, if I tried to have the same idea right now, I don't think it would work. I don't think that we would have done it the exact same way. Part of that is for the current economy's at. Part of that is the advent of AI becoming much more frequent in everyday life. So if I had to start over, it would not look at all the same way that it looked right now. So I want to be super clear about that. I think a lot of things have been changing. What I can advise people to do is they should go find a low-cost city they can buy a fourplex in to do that. 100%. I don't care who you are. When you're a young kid, go do it. But things I wish I had known earlier was that when you're getting started in any type of venture, right? The younger you are, the more value you provide in terms of raw output and in terms of people wanting to instill their values, their beliefs, and their way of life onto you. So there's a huge upside in
The
being able.
mentee aspect, is that what you're
Yes,
talking about?
absolutely.
Okay.
People want to have a mentee, especially if they can really see themselves like carrying it on. So do everything you can to ask people, what is it that you have going on in your business that you don't like doing? And then go solve that. And that's what I did to get my first multifamily, was talking to people. I was like, what do you not like about your process right now? They're like, I don't want to find deals. Great, I'll go do that. And after 96 times of trying, they were like, you're not going away, are you? I'm like, nope. And they finally gave me an opportunity. So recognize that your youth and your capacity to have raw output and your capacity to be impressionable is a massive upstart when you're getting started in whatever venture you choose to go after. And then kind of on the backside of that, kind of other side of the coin, recognize when learning turns into being taken advantage of. There is a very, very fine line that occurs, especially for young people who are starting out in their careers, where the idea of you're developing skills, you're learning, you are growing, and you're giving you an opportunity to be here turns into, we're not going to pay you enough. We're going to demand more from you. We're going to put this pressure on you that doesn't match your role title, your compensation, your whatever. And it's when you cross that line that you have to be wise enough at that moment, and unfairly so. You shouldn't have to be that wise. You should have people who aren't going to put those pressures on you, but it happens, to be able to say, I recognize that I've now crossed the border and my ability to grow here is now being encumbered by the fact that they don't want to treat me as that next person. And you have to move on. And so those two things are realities. And the third and final thing that I wish I'd known when I would tell people to go after is that you need to be a realist. And when I was younger, I was very much an optimist. And I would say that I'm still overall, I'm an optimistic
And so
kind of
you
guy.
seem very optimistic.
Yeah, but I place pragmatism almost above almost everything. Very practical. So when you're talking about situations, you're talking about employees, look at yourself, right? And this is when people start looking at me kind of like a robot, but that's okay. So when I look at myself as from a business perspective, if I'm being hired by someone, I'm a labor unit, I'm a cost. That cost has to be justified by a certain amount of revenue, no matter what business you're in. Doesn't matter if I think I deserve the money. Doesn't matter if I think that I'm worth more. If this person can't pay me X and get this return on me, they're not going to keep me around, or they'll fire me, or they'll let go of me. So if you want to keep your job, if you like your position, I don't care what role you're in, figure out how to have a direct impact on the revenue that you bring the company. I don't, even if you're not in sales.
So you can show a true ROI. Is that what
Show
you're
a
saying?
true ROI.
Mm.
Because ultimately, if you can show that kind of ROI, you're gonna not you won't save yourself in every situation, but you're going to be able to much more strongly advocate for your position in an organization. The second thing I'd also say is that recognize that it is much easier it's much easier to understand other people's human nature and psychology than it is to change it. So if I have someone I'm working with, interfacing with, or what have you, I go think to myself, man, I wish that they would just think the way that I think, or see things the way that I think, or perform the way that I think that they should perform, right? That's not going to work for me, especially being more junior. So what we need to do is say, okay, great. How is this person thinking? How is this person optimizing? And you need to adjust to that and form in order to accommodate those folks, especially as you're younger and you're learning, you don't have leverage. So you have to be able to put yourself in situations where you can learn how best to accommodate the folks you're working around, to learn as much as you can about them, to learn how they operate, and then provide value in ways that maybe they didn't first think of when they were first talking to you. An example would be you get hired, or you're working with a partner, and you find that they're consistently frustrated by this thing that's happening in their life. Like maybe they're every morning and their favorite coffee shop is always super slow or something like that. What I would do is I would go find a ways, and I have a couple situations like this in my life where I would say, okay, great. Hey, I'm going to go find a service that will make a cup of coffee for you, have it ready for you at your door in the morning. And it's something stupid like that, but
Solving a problem.
something that allows you to solve a problem
Yeah.
that makes your day-to-day life easier, even if it's not related to the work that you do, can help cement your position and help you be in a place to where you can get better access to people by building trust and building a level of proactivity in their life to say, I care enough about you to try to solve things that aren't necessarily in my purview. And so these feel kind of like 48 laws of power, kind of components. But over the course of the last couple of years, when you just look at how people act, when you look at the realities of life in terms of how does business work, how do people work, understand that people are generally for themselves and they'll be for you as well, up into the point where it's now against them to be for you. And that's not necessarily makes them a bad thing. It's just with human nature. So if I understand that you're going to be for me until this point in time and I can track that in the sand, it allowed me early on to say, here are all the risks in my life right now, where if someone does this or someone does this or someone does this, these things could happen to me. And here's where those risks are. So I always had a really good mental map of how stable and how secure is my current position as I make this transition to the next level. And when I could see those risks, I could start putting in actions to mitigate them in terms of having backup plans, in terms of doing things like, providing more value to that organization and doing things in a way to say, I can count on you being a human and acting like a human would act in this situation. So how can I prevent a situation where I am receiving a negative impact because of the fact that you did what was logical to you? Those things, full transparency, have helped me navigate this world, especially as you're going out there and I'm dealing with people who are much more experienced and older than myself, by routinely 20 to 40 years, and recognizing me coming in at my age and my experience, how to simultaneously be the mentee without being taken advantage of and not being naive to think that just because I'm super special, things are going to get given to me. To say like, no, if I'm going to be here, I have to earn it. I have to deliver it. And I'm worthy of respect, but that doesn't mean I'm going to get everything that I want. I have to take it and I have to advocate for why I'm allowed to take this. And I have to do it in a way that makes me also endeared to all these people.
Well said.
Well, this has been fun.
I feel like we should end on that.
Yeah.
The exclamation point.
Yeah.
Donato, how do people reach out to you if they want to know more?
Yeah, people can reach out to me at DanatoCallahan.com. You can also find me on Instagram at Donato_Callahan, and you can check out Bright Investor at brightinvestor.com.
Awesome. Thank you.
Good luck with everything. We're excited to watch your journey.
Thank you very much. I appreciate it.
Take care.